Hello, everybody. Yesterday we talked about if you should be incorporating your business or not. From the same discussion, today we're going to talk about if you should be paying yourself dividend or a salary. All my friends, lots of my friends, those who have their businesses, they always have this question: is that what's better for me? And nobody wants to pay taxes. Everybody wants to save taxes, and they want to know which way I'm gonna pay the least amount of taxes. So without further ado, let's get to it. Benefits of salary: steady and no known income every pay period. You know what your salary is. You know how much money you're gonna be getting every Friday, every other Friday, every month. You can budget yourself. You can make plans with your cash flow coming in with the salary income. Taxes are already paid. At the end of the source deductions are taken off from the salary income and already submitted to the CRA. At the end of the year, you don't have to worry about sending in a bigger check to CRA. Depending on your family situation, you could probably be getting a refund back, but very rarely that you will have to send money. The only way that could happen is if you did not fill out your TD1 forms or you claimed expenses that you were not supposed to claim. Salary income bills RSP room. This is a very, very important topic. This is something that is the reason why I would recommend my clients to take the T4s, the salary income over T5, is the RSP contribution room. So RSP contribution room is based on the T4 income. If you're receiving dividends, it is not building you RSP contribution room. So keep that in mind. In a way, when you have salary, you're deducting CPP, you're paying CPP from your own salary, and as a business owner, you're also paying employer portion of CPP on your income. So the benefit of it is that once you retire, you can take them. Well, you will start getting CPP benefits from the government. It's kind of your retirement, so you're paying towards your retirement. If there's going to be CPP in 10, 20, 30 years, who knows? But for now, think of it as that's your savings for when you retire. Salary income, one of the biggest benefit, the second biggest benefit after RSP contribution is that's what the banks like. Banks like to know the steady income that you're bringing in when you want to go get mortgages, line of credits, car loans. They like T5s. That doesn't mean that you cannot get loans with T5 income. I'm sure you can, but I think it's a little bit harder. They want more history. Instead of 1 year, they want 2 years, 3 years. I'm not a mortgage broker, but I think it's harder with T5. And you also have to, as I discussed, you have to pay your portion and the employer portion if you're a business owner on your salary income. So salary income, the other benefit is the entire salary that you have paid yourself out, including the CPP that you paid yourself, can be claimed as business expense. Drawbacks of salary: matching CPP contributions. So this is again, that you are paying towards your retirement. It is, yes, it sucks that you have to pay, the CPP, the employer portion of CPP, but you are building for your retirement. Extra burden of making source deductions. You'll have to hire somebody, or if you want to do it yourself, you have to make sure that those source deductions, the taxes that you take out from your salary income or your employee salary income, they are submitted to CRA on time. This is very important to CRA. They're very harsh when the source deductions aren't submitted to them on time. The penalties are astronomical. So please make sure those they are sent on time. Benefits of paying dividend income. One of the biggest benefits is that you save on the CPP that you were going to pay on yourself and as an employer on the, but are there really savings? That's debatable. Now if when you retire, you're not going to receive any CPP payment because you never built towards the CPP payment. Different way is much easier way to pay. You send a T5, all the money that you've taken out of the business, you accumulate that, make a T5, send it to the government at the end of the year. Normally happens around in the February time. You send it and you're done. You don't have to worry about source deductions. You don't have to hire more staff to make sure that the source deductions are sent on time, submitted on time. And you can also claim any interest that you have. So when you establish your business, you probably had to borrow some money, and that borrowed money is collecting interest, which you have to pay out of your own pocket. Now, when you're receiving T5 dividends, those interests that you originally had to take out, the money that you had to take out, that's you can claim the interest expense that you're paying on that particular portion on your tax return as an expense. I think they're called carrying charges, but you can claim that. There are a few tests that you'll have to pass. The intention when you initially took out the loan was for you to make money. The interest, government can ask you that to prove that it was actually, this money was used to build this business. So there could be some checks, but you can definitely claim some of the interest expenses that you are incurring on the borrowed money that you dumped to the business. Drawbacks of dividends. One of the biggest ones, this is by far the biggest one for me, as I've talked to you about in the benefits of getting a salary, is you don't build any RSP room with dividends. Taxes are not being filed regularly. So if somebody's making $100,000, they weren't good with their money, they weren't saving the money that they will be owing in taxes, and now they file their taxes, boom, there's a big tax bill. Then now they have to scramble for money. So this is another a very biggest drawback. And it's definitely difficult to borrow money with the banks, because banks like salaries, they like T4 incomes, they want to know how much money you're bringing in regularly. It gives them comfort. T5, on bank's point of view, they don't know if one year you're gonna get $100,000 or next year you're gonna get $10,000. It really depends on the profit of the company. So then I got asked the question is, where am I paying less taxes? Simple answer, there's no difference. So our Canadian tax system, it's very funny. It's been tested over the years. There's something called the tax integration. So the government has built the system that for somebody to receive dividends and somebody to receive salary, in the end, they end up making the same amount of money. So there is absolutely, there could be a little bit difference, but very, very negligible. That, they have built a system that if you receive dividends first from your after-tax corporate income, so you pay your business makes the income, you pay taxes on the corporate income, then the after-tax corporate income, you give yourself dividends, then you pay taxes on the dividend. So that's where the integration is. Somebody might ask, but there's got to be a difference. Yes, there's a difference, which is made up with something that's called dividend tax credit. It's another topic. We will talk about it some other day. But the simple answer is the tax integration works in a way that it does not make much of a difference of how you're taking your money. Dividends or salaries, they get taxed and you pay same amount of tax at the end. So then what should I be doing? Should I be paying myself dividends, or should I be paying myself salary? My answer to you is it really depends on your personal situation. We talked about it yesterday, the incorporation. If you have plans of making, buying a house next year, in a couple of years, I would be taking a salary T4 income, because it will make things a lot easier with the bank when they look at T4. T5 income, it will make it hard. And your personal situation is, what, man, I have a house, I have a good family, I don't really care, about taking money out. I just want to grow my business. Then I would take dividends. I would prefer dividends. If you want to leave some money into the business, let it grow, and then just pull out money whenever you can. So it really depends on your personal situation. If you have any questions or comments for me, please put them in the comment section. Like my video if you like them, subscribe to my channel,